Gold has reigned supreme for thousands of years. It's been the ultimate store of value, resistant to inflation, trusted across cultures and civilizations. From ancient Egypt to modern Wall Street, gold has been the bedrock of financial security. But that world is changing. And Bitcoin isn't just challenging gold. It's rewriting the rules of value itself. Today we explore the real battle happening beneath the surface of the global economy. Bitcoin versus gold, a $12 trillion showdown. Let's begin by understanding gold's legacy. Gold is tangible, it's rare, it doesn't corrode. And perhaps most importantly, it's been universally valued for millennia. Empires have risen and fallen with gold reserves. Wars have been fought over it. Central banks hoard it like treasure. And when financial markets tremble, investors flee to gold as a safe haven. It has outlasted currencies, governments, and financial crises.
Why?
Because gold is real. You can touch it, weigh it, lock it in a vault. And over 5,000 years of history have embedded that trust deep into our collective psyche. Today, the total market value of all gold in existence is about $12 trillion. That includes bullion, jewelry, and reserves held by institutions. It's the backbone of traditional wealth preservation. But then came Bitcoin, a digital coin backed not by governments or vaults, but by code, math, and a decentralized network. At first, it was dismissed. Too volatile, too abstract, a fad. But while the world was laughing, Bitcoin was growing. Faster than any asset in history. In just 12 years, it exploded from a few cents to over $1 trillion in market cap. That's not luck. That's a shift. A technological shift. A generational shift. A financial awakening. Bitcoin is capped at 21 million units. No printing, no inflation, no central authority that can dilute your savings. It's borderless, permissionless, accessible to anyone with a smartphone and an internet connection. It doesn't care if you're a banker or a farmer. In the world of Bitcoin, everyone plays by the same rules. And it's not just retail investors anymore. Institutions are piling in. BlackRock, Fidelity, and even entire countries like El Salvador are holding Bitcoin as part of their reserves.
Why?
Because they know what's coming. A new era of monetary independence. Now let's compare them head to head. Gold is physical, heavy, and expensive to store. Bitcoin is digital, weightless, and costs pennies to secure. Gold is difficult to move across borders. Bitcoin travels instantly, 24/7 across any country. Gold supply increases slowly through mining. Bitcoin supply is fixed and halving every 4 years. Gold is resistant to inflation. Bitcoin is immune to it by design. Gold is a passive hedge. Bitcoin is an active rebellion. In terms of performance, gold has preserved wealth, but Bitcoin has multiplied it. If you had bought $10,000 of gold in 2010, today you'd have about $14,000. If you had bought $10,000 of Bitcoin, you'd be a multimillionaire. Yes, Bitcoin is volatile, but volatility is the price of opportunity. Every new technology, from the internet to electricity, faced skepticism and wild price swings before it changed the world. And Bitcoin is doing exactly that. But this battle isn't just about technology. It's about ideology. Gold is trusted because it's old. Bitcoin is trusted because it's transparent. Gold is scarce because it's hard to find. Bitcoin is scarce because it's mathematically guaranteed. Gold is controlled by governments and banks. Bitcoin is controlled by no one, and therefore by everyone. And that's exactly why the younger generations are choosing Bitcoin. Gen Z and millennials grew up in a world of digital everything. They don't need to see or touch an asset to trust it. They need to verify it, and Bitcoin is verifiable, instantly, publicly, forever. In a world where governments are printing trillions, where inflation is eating savings, where fiat currencies are losing credibility, Bitcoin offers something no traditional asset can: monetary sovereignty. Now let's talk numbers. If Bitcoin captures just 25% of gold's market cap, it hits $3 trillion. That's around $150,000 per Bitcoin. If it replaces gold as the go-to store of value, we're talking $500,000, maybe even $1 million per coin in the next cycle. And here's the kicker. Bitcoin adoption is still under 5% globally. We are early. This battle isn't over. It's just getting started. Some say Bitcoin will never replace gold, that it's too new, too risky, too digital. But remember this, every legacy system, no matter how powerful, eventually gets replaced. Gold replaced salt. Paper replaced gold. Now digital assets are replacing paper. Bitcoin isn't just another asset. It's a new monetary system. It's faster, smarter, and more aligned with how the world now works. This is not speculation. This is evolution. So, who wins? In the short term, both may coexist. Gold is the safe, stable relic of the past. Bitcoin is the explosive engine of the future. But in the long run, Bitcoin is not here to compete with gold. It's here to replace it. Not because it's easier, But because it's better, this isn't just the battle for $12 trillion. It's the battle for the future of money. Which side are you on? Subscribe for more deep dives into crypto, finance, and the real shifts shaping the global economy. And in our next video, we'll reveal the altcoin that could ride Bitcoin's wave and become the next big winner.